Hey guys, so on this episode of Finance Musings, what are we talking about? We are going to be talking about Netflix's shareholder letter, which came out on April 19th, 2022. We're going to kind of build on the analysis of Bill Ackman's kind of exit from Netflix. Was it the right decision? And I've had time to, like I said, Netflix is a name that I own a single position in. Like I'm sure there's an index fund that I own through my 401k, and 100% Netflix is a position in those funds, but directly I don't own any ownership of Netflix. But one of the things that I said I do is that, I'm going to do some homework on my end over here, and then proceed to give you guys my thoughts on the company, if I'm going to invest in it or if I'm going to hold off. And ultimately, was Bill right or wrong? And only time can tell, so I think, obviously, only time can tell for a lot of things, right? So getting right into it, what you guys see, and first of all, shout out to the listeners in India, South Africa, New Zealand, America, England, Germany, Australia. I have like literally listeners all over, so it's pretty cool. It's pretty neat. So shout out to you guys. And if you guys are just listening, the links are in the descriptions. But what I have pulled up, I have the shareholder letter from January 20th, 2022 on the left, and then the shareholder letter from April 19th, 2022. And the one on the left is the Q4. The one on the right is the one from Q1. And, the crux of this episode, what I really wanted to dive into is Netflix not telling us something. Is there something more? And what I wanted to do was, hey, let's look at the earnings call and the earnings transcript. Let me just bring over this other thing. Let's look at the earnings transcript from March 8th, 2022. Sorry, this was the Morgan Stanley TMT conference. Let's look at what management talked about at the time with Spence Newman. He's the CFO, of Netflix. And then let's also look at the earnings call from April 19th. But first I wanted to start with what they told the shareholders, and then we'll kind of go into some of the questions that other people are asking, right? So if we look at the letter on for Q1 2022, let's look at what they gave us for guidance, right? For guidance, if we look right here, they said, hey, we're going to have 2.5 million streaming net additions, right? So that means that right now at Q4 2021, we're at roughly 222 million paid streaming members. By the end of Q1, we're going to be at 224. Roughly, that equates to net adds of 2.5 to 3 million streaming paid additions. So it was even after this when in Q4 results, management was like, hey, we have headwinds, stronger dollar, increased competition, whatever. They disclosed all this, but they still were like, hey, we're gonna have additions. Operating margins are gonna be at 20%. Even then, stock got battered. That's when Ackman came out and was like, hey, I'm going all in. Now, if we look, and I don't want to make sure I'm not skipping anything. In this Q4 letter, Netflix management very clearly, like right here, they give a reminder, like, hey, as a reminder, quarterly guidance we provide is our actual internal forecast at the time we report. That means in some quarters our results will be high relative to our guidance forecast, and others will be low. You almost get the sense that they are letting us know, hey, how to manage expectations around what we report as a company. You then flip to the right-hand side, which is when they actually released Q1 numbers, and their global streaming paid net additions were actually negative, right? Forget about 2.5 million. They lost 20,000, and they're going to say, that's 200,000. And then forecast for Q2 2022 is that they're going to lose 2 million. So you're going to go down. So pretty much they were static in terms of paid subscribers from Q4 21 to Q1 2022. And then they're saying Q2, hey, we're going to lose an additional 2 million. And this is when things really hit the fan, because in addition to saying, hey, we lost these subscribers, and this is where kind of my questions are coming up. We'll get to what you see right now is them talking about the competitive factors and risk and mitigants and all that. We'll get to that. I'm going to scroll down to page 4, which is Q1 results, Q2 forecast. Where is it actually? Sorry, I'm going to go to page 3. And I don't know, I haven't done enough research into Netflix to know is that, hey, in other shareholder letters or other presentations and analyses, have they come out and talked about, and it seems like this is a worry, like internally to the company, there's some executive, some team. I feel like there's someone there who may have been ringing the bells about this, but maybe it hasn't been spoken about publicly, at least from the company's mouths, as opposed to like industry analysts. And what I mean by that is this issue of, hey, there is about 100 million plus households using other household accounts. Now, the reason I bring this up is because I'm wondering if was the stock price going down almost what's the word? What's the word I'm looking for? Was it an intersection of acknowledging, hey, we have not only are we losing a bunch of accounts, but we also have a lot of households that are sharing other accounts. And was this something that they needed to disclose because they hadn't disclosed before? Or are they disclosing this now to kind of help investors mitigate fears and kind of distract them from the noise of losing 2 million subscribers, where it's like, hey, we lost a bunch of subscribers, we have these headwinds, but hey, by the way, we're just now recognizing because of X, Y, and Z that we have 100 million households that are sharing passwords, and hey, we're going to figure out a way to monetize them. It might take us 1 or 2 years, but don't worry, we're going to monetize them and make money. And we're going to introduce new pricing tiers, potentially have an ad supported lower tier, so we're good. But forget about the sticker shock of losing subscribers. And I'm wondering, and again, I could be totally wrong on this because I haven't looked at prior letters, I haven't looked through prior announcements. But if you're a new investor and you read, hey, the shareholder letter from Q4, shareholder letter from Q1, that's something that comes to mind right away. Is that like, hey, wait, like, is this kind of like a red herring? Like, are they bringing this up now to distract from losses, or it's just to say, hey, we know we lost subscribers because of these factors, which is, hey, obviously they shut down service in Russia, so there's numbers there, let's say 500,000 or whatever. LATAM, the dollar is considerably stronger than a lot of these currencies. I think they've lost about $1 billion in revenue in terms of if you adjust for currency for what they may have forecasted because of how strong the dollar was. So maybe, yes, there's headwinds of people in LATAM and other countries that are canceling their subscriptions, and we get all that, but hey, we're holding pretty steady at a 220 million paid subscriber count. And now it's like, hey, what are some operating levers we can pull to kind of bring down variable costs, keep our fixed costs where they are, or decrease them? And that's how we'll continue to, generate free cash flow, which there's some issues with that because you're still continually making new content. That's the part of the equation that like I haven't been able to figure out. And I haven't been able to figure out forget a back of the envelope, the actual math of cost of new content, when those costs get amortized, certain things get capitalized on the balance sheet. And really, I haven't been able to figure out that formula for me that I can be like, all right, let's say you hold subscriber static. Let's say we hold fixed cost static and the variable costs are content, and even then to an extent, let's say we hold content creation cost fixed, right? Maybe it might be higher for a certain quarter seasonality, but let's just assume it's $1 billion a year or whatever the number is. I'm really trying to figure out at what point does Netflix stop growing? Meaning at what point does it become, hey, we're going to make 10 and it's going to cost us 5 to make 10. And that's it. That's what we are. Like there's no more growth, right? If you were to cap it. And the reason that's important for me is to understand is like, could Netflix survive standalone as is now based off of the strength of its brand library, shows that it has? And because at some point, and I'm doing a terrible job of this analogy, it's like you have a bucket, you have a well, you're taking water out to feed, to quench thirst. It rains, it gets filled up again. But are you now taking more out to fill the thirst of the people you have? Because what I'm trying to figure out is that if content costs continue to rise, right? And I know what you're saying is that, hey, you're not paying for all your content at once. You're paying for it over time. You make content, it goes away. Then you're paying for new content, and then those costs goes away. But at what point does the content cost then start to equal is there a point where like content costs will catch up to what they're producing? But in theory, it's like, no, the new content we make locally, internationally, Hollywood focused, Bollywood, Tollywood focused, whatever, it's going to bring in new subscribers. Fixed costs get spread out over those new subscribers. And then, hey, we're going to continually make more money. Content costs are never going to catch up, and we're going to be free cash flow positive. That's the math that I haven't been able to figure out on my own. Maybe they have guided or given that math or walked through it somewhere in there, but I haven't come across it. But that's something that I really want to figure out to give me conviction that, hey, based on the debt load they're carrying, based on, a static number of subscribers, very conservative growth, and then you assume aggressive content cost, can this be a company that is going to produce cash flow, can sustain itself? And then do I have conviction in that, hey, I want to add it to my portfolio? So this all stemmed from this paragraph here on page 3, where they kind of go into this whole thing of like, hey, we have all these households we could get into and tap into, but I'm like, why are you telling us this now? And has that been there before? Something else that this is like a total 360, 180 from what I'm talking about before. I remember when I read Bill Ackman's letter, I'm like, oh, Bill, what are you doing? Like, I'm devastated, Bill. And I was like mad emotional on that episode, like, because I think so highly of Bill. So I'm like, oh shit, like Bill made a mistake and he's copying up to it. Like shit. What do I do? It's like you see one of your heroes like admitting they're wrong. It's like shit. So another part was here, right? Again, I don't know. Is like when I read this, I really have to question: is there something Netflix is not telling us? Internal data. When I say not telling us, it's just like, hey, do they have their internal models that are showing them, hey, things are going to cost more, we're not anticipating it, margins are going to take a hit, continue subscriber loss, and people are going to overreact? Because I guarantee you, based on if you read page 4, Q2 forecast, they're like, hey, and they kind of go into it of like, hey, Latin, we're taking a hit, dollar stronger, people can't afford it, maybe it's getting more expensive, and they're saying they've accounted for this. But if they account for this, why was your Q1 guidance in Q4 so wrong? Myself having worked in FP&A and corporate finance and seeing stuff so internally, I don't know how you could be so wrong. I mean, you give them the million, give them the 500,000 to million, give that to them for Russia, Europe. So whatever losses you had in Europe and closing service in Russia, fine. Let's say you give them that million net subscriber loss, right? That didn't happen because of, let's say you take $1 million that you lost, right? $500,000 is due to shutting off Russia. And then the other $500,000 is maybe because, effects of the war, tightening of, costs in Europe, whatever, right? Let's just say you attribute it to that, right? To the war and that situation in Europe. Then the question becomes, is there's such a large swing, right? You go from, hey, we're going to add $2.5 million to net in Q2, we're going to lose $2 million. That's a swing of $4.5 million, right? So you can explain away $1 million due to Europe. So that's a swing of $3.5 million. Then it's like, okay, well, let's say there's another $1 million that you lost because interest rates, Fed, macro, inflation, shit's expensive. People got a budget. Let's say you explain another $1 million away through that. You're still at a swing of 2 million subscribers. That was just a complete miss in terms of your forecast, right? Because so let me just walk you through, guys, that again is we're gonna say we're gonna add 2.5 million, but we actually lost 2 million, so that's a swing of 4.5 million. Where I'm saying $1 million of that swing can be attributed to Russia, another $1 million can be attributed to just whatever, things are more expensive, inflation, rates, whatever. Give the company that. You're then at 0. That means that you now have to bridge me from 0 to 2.5 million subscribers. My question then is that when you were doing your internal forecasting, what led you to believe that you were going to add 2.5 million? Can you then chalk it up to like, hey, we didn't foresee Russia. We didn't foresee them invading Ukraine. We didn't foresee Fed tightening this quickly, inflation rising this much. And then their argument would be like, well, hey guys, if we say that if we're going to use that as our justification, then that swing is not actually 4.5 million, right? Then that becomes that, hey, the 2.5 million that we thought we were going to add was, the reason that is wrong is because you didn't add any. I'm saying that Netflix, hey, the people you lost were people that you lost because of these unfortunate events. So their argument would be like, yes, we didn't add 2.5 million people because the people we thought we'd add, let's say in Europe or Latin or America or Russia or whatever, didn't happen because of the factors that caused us to lose 2 million in the first place. That's something that I am willing to believe and understand and that I'm okay with. And that's what still then leads me to concern, is that then why doesn't Bill Ackman believe that? Because that's the question, is like, why doesn't Bill Ackman believe that? Because I imagine that's how Netflix would explain it. And that's my confusion, is like, shit, what am I missing that makes Bill not believe in this, So yeah, guys, that's it for episode episode 9. I know episode 8 was we dove into kind of Bill's thoughts. On this episode, we kind of dove into the shareholder letters. The next episode, I'm going to rip through the earnings call transcript. I'm really going to go through everything Reed and Spencer and all them. And then in addition to the earnings call transcript that we're going to rip through live, we'll also go through the Morgan Stanley TMT thing. We'll go through that together. So we'll go through those two together. That'll be a nice 20-30 minute exercise. But kind of where I stand today, I still don't know why the justifications that Netflix has given and kind of how they explain things, why wasn't that good enough for Bill? And is it good enough for me? As it stands today, I'm still going to wait for Q2. Because if what they're saying in this Q1 shareholder letter and what they're telling us in here is true, then things should, because what this is like, hey, I want to test management's ability to speak to what they're saying, right? And if you're going to tell me this, I'm like, all right, I'm going to believe you. I'm still a fan of Netflix. But before I go and invest in $1,000, $5,000 in a Netflix, I need to see what Q2 looks like. Because Q2's story, if it resonates with what they said in Q1, then it's like, okay, maybe they figured out shit between December 2021 and April 2022. They learned a lot of shit, and now it's going to be a new forward for Netflix. With that being said, as of today, I can't recommend Netflix at all. And I'm going to have to wait till Q2. And that sucks because after reading Bill Ackman's letter, initially I was like, wait, what? I was like, Bill, you're wrong. Like, the business model is still there. And this is nothing against Netflix. This is just more about, hey, let's see what Q2 looks like and then make a decision. Most likely, I'm still, hey, I think Netflix is a great company, but I just want to see what happens in Q2 because I want to know, does management have the ability to accurately forecast what they're telling us? Because that was Bill's biggest thing, was like in his letter, was like, hey, look, we don't think we can accurately predict what Netflix's performance is going to be like. What I'm betting on is I'm betting on management. And I'm like, all right, I'm going to believe everything you said on this shareholder letter from Q1. I'm going to believe you guys. But before I can have conviction to go in and buy stock in you guys, let me see what Q2 was like. And if Q2 makes sense, if I can bridge Q1 to Q2 without just doing a bunch of random math in my head like I just did now to kind of like assume how you got to these numbers, then I can confidently say, okay, hey, whoever's working on their FP&A team, their finance team, their CFO team, they can accurately guide their business, and internally they know how to forecast themselves. Because if you can't internally predict shit, why would I have any belief in you, right? I could believe in the company, but it's like, oh, there are other great names out there that I'd rather invest in, right? So, because it all comes down to capital allocation. If you have $100 or $1,000 and you got to put a $200 into a company, $300, $100, $500, whatever, yeah, Netflix might be a good company, but I really need to believe in management because there are other great companies out there that are going to be better return on a dollar than Netflix might. So this is nothing against Netflix and leadership. It's just I need to have reasonable certainty, like, hey, they know how to forecast their business. They understand the drivers. And whatever happened in Q4 and whatever led them to think they were going to add $2.5 million, remember, I'm giving them the $2 million that they're forecasting lost in Q2 because we're chalking it up to Europe and we're giving them that. What I'm trying to understand is that miss on that other $2.5 million, because those were expected to be new additions that just didn't happen. Are you then going to just blame everything on the market and say, hey, we didn't add 2 million subscribers because the market got expensive and the dollar's stronger than certain regions? That's an easy thing to say. Like, you can just say that and yeah, that makes sense, but I need to see what Q2 looks like before I can make a decision. So what's most likely going to happen, guys, next episode, I'm sorry, I'll go through the earnings call because I really want to. There's some really, really good questions. The JP Morgan guy asked a ton of good questions, and this Morgan Stanley chat was really, really good. So I want to go through that, and then we'll have a pretty decent kind of deep dive on Netflix and just kind of like still in a holding pattern, but we're going to have to wait till Q2 till we make a decision on the company. So anyway, with that being said, guys, thank you so much for listening to this episode of Finance Musings. We got to talk about Twitter. We got to talk about Elon Musk. That's going to be really interesting, talking about Twitter and where that's going to go. And not that it matters. I mean, they're getting taken private, but I think it's just interesting to, hey, talk about the company and kind of the economics behind that deal. But anyway, guys, thank you so much. Let me know what else you'd like to talk about me next. Catch me streaming on Twitch, subscribe, all that good stuff. If you like it, share. And excited to go through the earnings call transcript on the next episode. Peace.